Ladies and gentlemen, good day and welcome to the 3i Infotech Limited Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY LLP Investor Relations. Thank you, and over to you, ma'am.
Thank you, Rayo. Good evening to all of you. Welcome to the Q3 FY24 earnings call of 3i Infotech Limited. The results and investor presentation have already been mailed to you, and you can also view it on our website at www.3iinfotech.com. To take us through the results today and to answer your questions, we have top management of 3i Infotech Limited, represented by Thompson Gnanam, Managing Director and Global CEO, Sushant Purushan, Chief Revenue Officer, India Business Region, Sanjay Rava, Chief Financial Officer, Sax Krishna, Chief Operating Officer of Value Business, and Varika Rastogi, Company Secretary and Head Legal. Thompson will start the call with the business update, which will be then followed by Sax, who will provide the update on value business and Nure Bharat Railtel project. After that, Sushant will give an update on India business, and then we will open the floor for Q&A session. As usual, I would like to remind you that anything that is said on this call that reflects any outlook for future or which can be construed as forward-looking statement must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual report that you can find on our website. With this, I will now hand over the floor to Thompson. Over to you, Thompson.
Thank you, Asha. Good evening, good afternoon, good morning, dear shareholders. So I would start with, before I get into the performance of the quarter, I also wanted to inform the investors of a concerted attempt from the management and the board to resolve some of the age-old issues that have been limiting the growth of the company in more ways than one. While on one hand we are working on newer avenues of the growth, while consolidating our bread and butter businesses, the not so very comfortable nature of the balance sheet due to legacy issues does pose an impediment to the growth trajectory and the strategy which we have carved out for yourself. We therefore decided to address some of these issues once for all. To set a context, we have also given a detailed note which is there, but I'll touch upon a few points, and then once during our question and answer we could probably take it in more detail. Post the sale of the product, carve-out of the product division in 2021, and the new management headed by me, we took over this organization and rebuilding this organization, creating the new vision, mission, and strategy as we have been kind of working on this for the past multiple quarters. We started realizing that it is very, very important for us to fuel this growth, to be able to represent the right balance sheet for us, because there are a lot of legacy issues which were there in the balance sheet, and then the management and the board and the audit committee set up a legacy committee, a subcommittee, to just stay focused on it, led by the audit committee and audit committee chairman, Mr. Uttam Agarwal, to evaluate these long-standing issues. On the basis of internal evaluation and approval from the audit committee, we decided that we need to ensure that we right-size the balance sheet and create the right net worth for the company to help us fuel growth. Hence, we had provided certain allowances, one against our receivables, and then some general provisions, the value of investment of almost 421 crores, which against the investments in our foreign subsidiaries. But we are now starting a more detailed audit, which will probably we have proactively done as a management team to ensure that we provide for this, in line with the high standards of governance which we have taken. And once we have this more detailed audit happening, we'll be able to come up with more specific interventions which is required by the organization. So I will get into the business results, and then maybe we can discuss more in detail the questions you might have with regard to this. And I will also invite Sanjay at that point of time to probably talk to us more on that. So coming quickly on the business side of it, I keep saying, as we are battling legacy issues, we have a current battle to fight, and we keep fighting. And the business results, we have grown our revenue from almost 210.3 crores to 212 crores in spite of headwinds in some of the geographies like US. As you know, global economic issues are, but we have been, the good news is some of the other geographies like India are growing. It's been able to keep up our revenues. Our gross margin has also grown from almost like 11.4% to 14.8%. We have been eliminating cost and trying to make the organization slimmer. We've been optimizing spans and layers. Some of these are all starting to aid the results which you're now starting to see. If you look at it also, we are also trying to rationalize the selling cost because we have done an important change in the sales organization structure. We will see more impact of this in Q4 as well. We have clearly reinvested in the existing customers to fortify them and farm and grow them, and very clear new hunting structures, and we are optimizing the cost. And the cost is heading down if you look at it. So we'll see some positive results in Q4 as well because of cost optimization. The GA cost also we are now optimizing. There are some certain half-yearly costs and other stuff which is good, but if you look at it on an average level, if you look at it, it's starting to come down. And Sanjay will talk about some of the initiatives we are taking there also in the GA cost, which will also be optimized further, and we will start seeing the effect of that. On a normalized EBITDA, if you look at it quarter on quarter, at an operating EBITDA level as well, we have moved in 2.7, but if you adjust it to some one-time expenses over a period of the half yearly, I think we are more or less in that positive zone before the RailTel project. And the important thing and the good news for us, because one of the big bets we did and is on the RailTel project. The spin-off investments we have made. The good news is that finally we have clocked a big deal for RailTel, which gives us a big relief for us because we have done all the investments and now the revenues will start kicking in. We have made the release there. So definitely Q4 we'll start seeing revenues coming in, and that will help us straight away to the bottom line because we kind of provided and for the expenses, and also we have done front-loaded investments in various stuff. So that's going to be a big relief for us in the Q4, and these numbers will change to the better in terms of the EBITDA as well. So broadly, if you look at even at a console level, we have also taken a proactive provisioning, because one thing as an organization we want to do is we want to be very extremely clear in our governance and proactive management here. So we've also gone in and taken a provision of foreign subsidiary tax liabilities to the tune of almost 13 crores, which is being taken and which is there in our console. So these are provisions which we have taken, and we are also working hard to see if you could see how we could reduce the impact of it in the long term, and see if we can continuously figure out what we have provided for bad debts and various other provisions where we could probably see if we can optimize the impact on the long term. So that's broadly on business numbers, but I'm going to probably and also quick headlines if I look at it. Apart from some of the good news and the various build products we've been investing on, that is two good things happened for us. One of our platforms, which is a FlexiPlus testing platform, has been recognized by LS Group in the PEAK Matrix as an aspirant, and is really enabling us to build automated and testing environments along with cognitive, which also drives revenue for us in some of the mature economies as well. So that's an important accomplishment we had. And also our investments in Uray Campus, which is our higher education student information systems and ERP platform, which is more like a mid-market platform, has been recognized by Gartner again as a challenger. These are two really, a booster dose for us to kind of, drive our revenues and also a validation of some of the strategies which we have been kind of investing on. Broadly, otherwise, we also had a lot of new contracts coming in because in some of the areas where regions where probably the contracts have been, but overall as an organization, we have kind of added 26 new contracts in this quarter, which will also help us to grow revenues in the subsequent quarters. So broadly, I will pause here and maybe I'll hand over the call to Sax to elaborate on the value business, and then maybe I'll come back once the question is asked. Thank you.
Thank you so much, Thompson, and thank you everyone for taking valuable time to join us today afternoon. I'll talk on two topics. One is what we call as value business, and the other one is our radical public-private partnership called NBN, Uray Bharat Network. Let me first talk about Uray Bharat Network, since that is a recent news of validation of our value proposition and the investment we made in that venture, which is the deal from a esteemed organization like BPCL, which has been announced in the marketplace, which, it gives two aspects in there, and we are right now in the process of mobilizing the deployment of both the aspects of that order. And the aspects are, one is digital branding, which is digital advertising that happens on the devices, the smartphone or whatever devices people carry in these platforms. And the second is the physical branding, as in each of the 6,109 stations. We will put posters and banners and stickers on top of in the platform at various points, which of course has got BPCL branding, but in the process, it also aids in increasing of adoption of the free Wi-Fi, and so it increases our number of users. So those are two highlights of not just the value of the deal, but the significance of the deal in terms of how it helps us to propagate the existence of free Wi-Fi, which is a well-kept secret in some of the stations, and help us to increase the number of users, which then will add more value to the advertisers and therefore more revenue for NBN. Based on that validation, and like Thompson said, the BPCL deal itself, we'll recognize revenue this quarter because we've already started to deploy the various aspects of the deliverables that are involved in the contract. Based on this validation, because BPCL is such a large PSU organization, there's a lot of credibility that is in the market that is established, because of which our pipeline has now become more advanced and getting closer to turn into contracts. Some of them are in FMCG, some of them are banks, some of them are state government. We have close to 100 crore plus pipeline. The BPCL deal itself at the value that we announced is only a partial inventory. It is not the total inventory that we have in that NBN plan. So obviously the future, the promise is much bigger of getting other co-sponsors onto the platform and securing at least multiple year revenue. Because even this deal is 2 years, the other deals that we're getting are also multi-year, and therefore to secure the revenue for a longer period of time. So that's on NBN. If there are any questions, we can take that up later. On the value business, there's overall multiple dimensions of achievements and growth and stability that we have achieved. Let me take the leaf off from what Thompson said about the two recognitions. One is from Gartner for our campus labs business unit, which is to do with the higher education, student information systems, and the ecosystem around it. That recognition is a validation of the support and value that we've been providing to universities, predominantly in India in the past, but now that has expanded, and now we've got prospects in both US and Asia Pacific and Middle East, which should see that unit scale quite a bit, and that's definitely a contribution from Gartner's recognition, vice versa. The other recognition that we got from Everest Peak Matrix for next-gen services, which includes the Flexer Plus, is again a validation of value that we are already providing to some of our customers, except this now brandless into a more industry standard, industry certified offering, and that helps us to decrease the cost of the total software development life cycle for our customers. Typically, testing is end of the software life cycle, but it has an impact at the beginning of the software life cycle, because if you know what failed, then you will write the software not to fail. So overall, total cost of software development life cycle will start reducing for our customers in prospects, and that's the value proposition that we are taking to the market. The other business unit within the value business called Next-Gen Services, which is to do with AI, ML, cognitive solutions, is also rapidly being adopted across various industries, across various geographies, like law enforcement, police departments in India, state governments in India, U.S. banks, other industries, manufacturing and gas distribution industries, multiple industries, multiple geographies, which is what our hypothesis was, that our AI, ML, and cognitive future tech stack can be applied to different industries, and that's what is being proven with the pipeline that we are currently generating. Our application analytics and automation business continues to be the largest share of DBU because it obviously has been there for a longer time than the other business units. But the other business units are catching up, like cloud. Cloud solutions are now being widely accepted by customers across the APAC and Middle East, India, and US. My last note to the shareholders: in order to increase the quality and quantity of pipeline, we have now formed a dedicated GTM team to focus on our existing accounts. We have acquired accounts. Thompson just mentioned 27 new contracts. But over the last year and a half, we've acquired a lot of customers, and with a one service line many a times, whether it could be application development or it could be infrastructure management. We are now taking those customers and cross-selling and upselling. What it does is the quality of pipeline increases, the cost of sale decreases, and you should see shorter cycles of deal closures, which should start resulting into revenues in the coming quarters. I will pause there and wait for any questions later, but now let me pass it on to Sushant, my colleague, to talk about the enterprise services. Sushant, over to you.
Shareholders. Good afternoon, good evening. Thanks, Thompson and Sachs. My name is Sushant here. I just give you an overview of enterprise business and India business strategy. First of all, as an enterprise business, we've grown quarter to quarter by 10%, and we've grown 40% YTD from FY22-23. And the similar improvement is also there in the bottom line as well, which is in the margin front things. The growth predominantly came from the volume business of enterprise services, which is led by IMS and the classic BPO services as well. In Q3, we have gone few projects gone live. We have gone 3 large projects which has gone live, which are predominantly 3 years contract. Projects like Ujjivan, projects like Civil, and also Rajasthan State. The 3 projects were gone live, and that revenue continuously comes in upcoming contract as well. One of the important aspects as part of my discussion is that first time as an India as a territory, we have taken over from US on this quarter as an India territory, and I look forward to build a strategy to grow for an India for upcoming quarters as well, including next financial year. We've added 2 contracts last quarter, but even though the contracts are not big in size, but these are all the large customers NDA we signed. We signed the global MSA with Standard Chartered Bank. That helps us to operate from India to any of the regions where Standard Chartered Bank operate. And we look forward to be part of the global Tier 5 companies associated with them. That's a good thing. We also enter into one of the financial customers called Manappuram, where we got into an entry of that, and we look forward to get the growth as well. That's a good thing on that. On move forward for the future point of view, we are looking forward in Q4 to bid for a few of the large global India public sector opportunities. We have participating. We will try to put a right bid to that to ensure we will get at least 2 secure deals in Q4. That's also going to help us for our expansion plan for Q4 and next year as well. This is coming back to as the practice and engineering side of that, remote delivery or a digital IMS is one of our important aspect where we look forward profitable business on that. We manage global support center from India. Chennai was a center here, and we built a BCP site for Bangalore, which was a demand from customers. So we are also working towards improving this center capability so that we go to look for a global large managed services outsourcing deal. Typically today is taken care by Wipro and HCL, and yes, by end of Q4 we'll be competent to take over them on this. That's one of the things we look forward on that. Finally, I also putting strategies of that both on the areas like IMS as well as the government consulting. We're going to put a strategy for next year so that our pie will going to increase, and we show the same demonstration of the revenue growth what we've shown from last year to this year and the next year as well. This was my brief thing from my thing, and I hope I covered all the aspects. With this, I'll hand over to operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Siddharth Gupta from Voyager Capital. Please go ahead.
Good afternoon to the entire management. While the revenue growth is commendable, I actually joined the call a little late, so I'm sorry if you've already explained this, but could you please elaborate on the reason for our losses? I understand these are book loss or accounting items booked from the carve-out time, but could you, if you could kindly explain the same again, it would be really helpful.
So, if you're referring to the consolidated financials, or are you referring to the standalone?
On both actually, because it reflects on the console as well, right? Because of the standalone.
So let me address the console, Siddharth. So console primarily there are two reasons. One is an exceptional item for which we are anyway commented in our notes. So there is a one-time tax-related provision that we have done for one of our overseas subsidiaries, which includes the tax as well as some penalties as well, the fines and penalties. That is about 13 crores, which is included in the loss of in the 29 crores that we have reported. That is one element. The second element is primarily, on account of we had certain sales-oriented costs and travels in the third quarter, and linked to that, there were some one-time expenses. So apart from that, I don't think we have any other major reasons for our loss to happen.
Sorry, could you repeat the second one? I didn't catch it. Your voice was breaking.
No, so we had some one-time travel related expenses since we have the US related growth happening, because we want to also pump ourselves for the new Q4 and the new year. So we had in Q3 certain one-time travel expenses for the US territory. So apart from that, we don't have any other items as exceptional. Coming back to the standalone financials, there are two line items in that. One is, we have a detailed note under note number 3, but I just want to add on that. So one is a provision towards, our intercompany receivables. So as we've been saying all along in all our notes earlier as well, that we have already filed an application for RBI towards settling of our long overdue outstanding, which is more than 12 to 15 years. But to be in prudence to the provisioning norms and to be in line with, because since these are very age-old outstandings, we have taken a provision in books for the amount which we see as today doubtful for receivable from this overseas subsidiaries. That is amounting to 214 crores. The second one is we have taken a general provision of towards diminishment in value of our overseas investments, amounting to 421 crores. This is in line with certain, as Thompson was also saying, we did have, as constituted by board and the audit committee, we have instituted certain audit, and based on the initial findings and further to any other findings that we may have in future, in view of the forensic audit that we are proposing, we have taken, in general ad hoc, a general provision on that account in terms of diminishment in value of investments.
Okay. So I just have two quick follow-ups. First, with regard to the tax and penalty on the foreign subsidiary on the Concall level, is this pertaining to the pre-carve-out period or post? And if it is pertaining to the pre-carve-out period, would it be something that we can recover from SNTU? Secondly, with regard to the forensic audit, could you elaborate on what was the sudden need that arose that got the board to ask for a forensic audit, and by when can we expect the results for the same?
So what I'll do is, I'll give the first one, Thompson may give it a second on the forensic audit. So first one, related to the tax, it is a pre-carve-out period tax liability. This itself also is prior to 2021 period. Second, this is not linked to SNTU, because SNTU we had done an asset deal. It was not an entity transfer. So any tax liabilities we can't transfer to SNTU. Third is, this is anyway provision. So we are anyway working with the authorities to see, because we had gone into appeal for certain provisions in the tax laws of the specific country. And we are working on that. So it is in good parlance we have taken, good prudence we have taken. But we are still, hopeful that this may come in our favor.
Yeah. So Siddharth, on the forensic audit, if you look at it, these are even not just pre-carve-out issues. We are talking about pre-CDR time issues which we are still carrying in our balance sheet, and we are talking about when pre-CDR is before even 2013-12. The first RBI, request was made as back as that point of time, and we're talking about those areas. And on the larger note, if you look at it as an organization, so if you look at it from that point of time, the company has gone through multiple transitions, if I may look at it. Obviously we were born out of a bank, and you were part of ICICI, as they say, was the promoters. We got listed, and then you've gone on. Then we got a CDR, then we have a DRS, then we come to a post carve-out, and then the post carve-out after that we are there. So I think for us, for the future, as an organization, as shareholders, it's very, very important for us to kind of set this new baseline. It's very important, because all the growth aspirations we have, all that what we have are all linked to all this, because it's a kind of a how do we get the right depiction of the balance sheet is the foremost thing. That's point number one. So as an organization, we have been doing this special audit. The legacy committee has worked on it, and they have been working on it for now almost 3 quarters or 4 quarters. So there are a lot of insights we have got, and it's also very important that we probably bring up, because the number of years is so long back. We would need some real professional help to help us stitch these pieces together and come up with a very clear way forward, Siddharth. So that's the reason why I think the board in its wisdom decided to do this for all of us.
Okay, fair enough. I understand this, but I will head back to the queue, but just a comment before I do that. It is very disheartening to see that these are decisions that were needed to be made immediately post the carve-out. For the past few quarters, there have been these provisions which have constantly been being made on the justification that, well, it's something that's happened pre-carve-out and we need to establish a new baseline. While I agree on principle with you, this is something that has to be done much earlier. The question which I think remains for every shareholder is that we can't be establishing a new baseline every quarter. Why is this happening?
No, I agree with you, Siddharth. I'll tell you what. See, this is long due from 2013. Okay, let's face it. You go to the records, it's long due from 2013. We have done it. We had various timelines. Obviously, the company was going through a CDR, then we had a DRS, then we came out of the debts. We kind of monetized our assets. So 2021 is a new beginning. So from there on, I agree with you. We could have done it 2 years ago, whatever it is. So we had to work on it. Because see, we are now flying this plane together, all of us in this together. We cannot land it. We are across the Atlantic, as I keep saying, and we have to keep repairing the plane. That's what we're doing today. Now we can keep arguing whether we did it 1 year ago or 2 years ago. But I said, good news is that we want to be done with it this financial year and then just focus on the business and create value for all of us. I think that's the thinking, Siddharth.
Right. Fair enough. And just one suggestion before I go back to the queue. If the company could put out a press release or in the presentation, say the performance of the company without these provisions being made. Hypothetically, if these provisions weren't being made, how is the company performing as a standalone company if it is working as a fresh company? That would really help entry-level shareholders to understand the working of the company, the fresh workings of the company, apart from our past version, right? Thank you, and I'll go back to the queue. Thank you.
Yeah, thank you. We'll do that.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Sharan, who's an individual investor. Please go ahead.
Hi, this is Sharan. First of all, I would like to congratulate the management team in getting good contracts this quarter, and especially on the Railtel. My first question is I was just going through your presentation, and I kind of observed that the clients have reduced from 485 to 440 from Q3 financial year 23 to 24. And do you have any reason for that?
Yes, Sharon. See, some of the losses we are having, these are small customers. If you look at it in USA, for example, where we just have professional services, maybe we are just having, a service of 1 or 2 people or things like that. So if you look at it, those are the losses we have. So predominantly the losses have been these very small contracts, predominantly in US. But most of the other territories we have been adding, and we are ring-fencing our existing customers, Sharon.
Okay. So basically you're trying to, close on small customers and trying to focus on the bigger ones.
Bigger ones, small ones, non-profitable ones where we are making low margins. So we have been sincerely seeing because the gross margin, they've been there for a long time. They would have just probably 1 or 2 of our resources might be working there for a long time. It doesn't make sense. Year on year, keep giving hikes. They don't give you a COLA adjustment. So sometimes we'll have to exit.
Okay, great. And I do have one more question. With regard to Railtel, I was just trying to get this PipoNet from the App Store, but I couldn't find. So if you can just probably tell the investors from where we can find this app, that will be of a great help.
Hello, Sharan. Sure. Thanks a lot. I think that's a very great question, really. So there are PipoNet is going to be our way forward, a super app which we have done. So what we did is we kind of slowed down it because first our immediate action was to get a break-even, Sharan. So what we have done is if you go to the RailWire today, RailWire is immediately you see our ads which are there because that's a free Wi-Fi where we are doing all that and done. And then now, as part of the Railtel deal, we'll be activating the PipoNet again, and you will start seeing it because we are starting to generate revenue, and we'll also start adding all the new lines of services, Sharan.
Okay, so which means that you have not yet released on the App Store.
No, we got it tested. We didn't want it to be there because see, the no point putting a PipoNet app without any advertisers or revenue, right, Sharan? So what we we paused it for now. Now that we got it, we'll put it back there, and we'll have all the other services come.
Okay, because I think if you can also highlight this, that would be of great help because a lot of investors, they were kind of wondering why this is not in the App Store. So
no, very valid point because we will highlight that because right now if you go to the RailWire portal, you can see that. Then it goes to our PipoNet website. All the advertisers which are right now live, you can see it actually if you see.
Yes, I did check that. And one more question that I have with regard to legacy issues. It's how long this provisioning will go? Like, for example, for the next quarter, will you be again provisioning? Because if you're going to provision it every quarter, it's going to be a kind of big provisioning that's going to happen every quarter. So how long will you be doing this provisioning?
Maybe I'll tell you there are 2 parts, okay? Some of the legacy issues, Sharan, are so Okay, I'll break it into two parts. Whatever we have done from an audit committee advice and a board and a new management perspective, we have done that provisioning right now, right? Now, beyond this, if you ask me, I think we'll wait for. That's why the board and the audit committee and everybody, and the management, we felt that we should have this forensic audit, go back and do it. It's way back in time, and then come back and we'll see the results. But we're trying to see how fast we can do it, because we have already done the special audits for the last 3-4 quarters. The legacy committee has already done that. So it is not going to take forever, for sure. We will be able to quickly come to a conclusion, and we'll probably able to have a new fresh start, Sharan.
Yeah, because if you are not doing this provisioning, I think the company is in a good position to get much more bigger orders. And also for the investors, we can see some kind of a positive impact on the book.
Agree with you. Absolutely agree with you. Because we want to be done with it and just stay focused on business. That's what all of us also want to do, Sharan.
Great. Thank you. Thanks for the call, and I think you people are doing a fantastic job by getting more good contracts. Thank you.
Hey, thanks, Sharan. Thanks for your support.
Thank you.
Thank you.
Next question is from Sanjot Khare, who's an individual investor. Please go ahead.
Hi. Good evening, Thompson and team. First of all, congratulations for the good set of numbers in a weak quarter. I mean, though I already explained what are the previous issues, and still in that the revenue has increased compared to Q3. So great thing about that. Only disheartening is we are still not able to see the positive pad, and hope that quarter will come soon. So my question is related to now the slide number 10. Right now we are 10-year plan. For FY24, the projected revenue was 1,000 crores, and now we are around 620 or something. So what is the projection now for this year? And FY25, what are we looking at? That's the first question. And second question is about the US business, because this quarter is looks like India has crossed US revenue. So it's a good and bad both. I mean that India is growing, but how is the situation now in US? Are you seeing that US is going to grow further from Q4 onwards, or are you still seeing there is challenges in US?
Yeah. So Sanjot, thanks for your encouragement as always. You've always been asking about your favorite, and you have been a strong supporter for us on the RailTel project. So finally, we are, like what Zach said, the validation of our strategy is happening. That will also contribute to our profitability, Sanjot. To your point, if you look at it, that's why we keep saying it with the project and without the project. So at an operating EBITDA level, we will see changes happening in Q4 because now revenues are starting to tick in. So that's one positive to your point. Second, also, we are also taking a lot of, as I said in my initial opening comments, there are a lot of cost optimizations we are looking at. Maybe even Sanjay can talk about some of the optimizations we are looking. So those are the things will probably give us that bottom line gain, and as we can keep the revenue growth intact. The other aspect, Sanjay, for me, one of the reasons why I'll try and answer your question, why we are not growing as fast as what we can. Okay. For us also, today, if you ask me this year alone, Sanjay, we have not encouraged almost 100 crores worth business. I'll tell you the reason why. Because today, the growth at which we are going and the capital which we require, it doesn't match. Let's be very clear about it. So unless we are able to clean the balance sheet, what we are doing, get confidence of bankers and the way we can raise better capital, we cannot accelerate growth. So that's one of the reasons why we want to do this cleanup also, is to probably get a real picture and then be able to get the support of investors and bankers to help us fuel this growth. So that is one area where we have also now been careful, not getting into very large deals which needs a huge capital upfront and things like that. There are a lot of deals. So that is one point there. So that is what we want to fix this very quickly and get back to that growth trajectory which we had put for ourselves, Sanjay. To your question, we will continue at this run rate. So if you look at it, this run rate, even if you do a simple, I don't want to, so we will end up somewhere around 825 or so, at this rate. without RailTel, for sure. But RailTel is a bonus now, and we've got all the cost in. So whatever revenue we get now, we're going to book now is going to be on the bottom line. So that's a good news, which is there. Second, like what Zach said, we have a huge pipeline for RailTel building up thanks to this, because it's a huge pipeline. Almost 70% of the inventory is available for us. And that's going to be very good for us next year, because this is contributing to our bottom line, because we got all the hard work done, we got the technology done, we have made all the investments. So the bottom line contribution of RailTel project will be phenomenally far higher than the non-linear contribution compared to our linear services business. So that's going to be the good thing. The third thing also, the platform, the technology, what we built also is a product of the company, which we now can productize it, we can sell it globally independently. So that is also we are looking at it. Those are the positives on the RailTel business. Coming back to your third question, the US-India stuff is a global problem. If you look at it, we are not alone in this world. If you look at it from that perspective, there is severe headwinds in the US. In fact, in strategies, we are looking at seeing how we want to just protect our revenues, reduce our cost right now, because we are reducing our cost in US. There's no point in increasing too much cost. So we want to increase on existing account retention and the farming of our accounts. That's an opportunity. We want to probably stop new account, cost spent on that, because it's going to be a total, waste of investment. We are very clear on that. So consolidation in the US is very important. Second, India's opportunity is massive today. If you look at it, we want to really step up. As I've been saying consistently, there needs a credible Tier 2 player with a lot of Tier 1 players exiting the market. 3i Infotech is positioned really well to take that opportunity across all service lines. Even under value business and across all service lines. So we are doing some pilots, phenomenal pilots on future tech in some of the large areas. So all this will fructify what Zach said. And of course, IMS is in a role we want to kind of, take it to the next level, step on the gas. Again, this is also capital intensive. So we are now playing it cautious, because we don't want to get into larger projects and have working capital issues. But the point is, the business is there. We are recognized as a force to reckon, even in India and in Middle East and some of these territories. So we will focus more on these territories in the next 2-3 quarters in terms of growth and watch US and other Western economies very closely right now, Sanjay.
Sure. Thank you, sir. One more question is good to see that 26 new contracts have been won in last quarter. But we have seen only one, I think, probably a year about concept communication. And is it all contracts are small, or there are any contracts with value?
Yeah. So Sanjay, what we do is we only communicate real big ones. If you look at it, these are like small additions. Say, for example, we even signing an MSA with a large multinational is a good win, but we may not have got big revenues immediately. So these are all small beginnings. We also had a contract from a UAE money exchange company, which is good for optimizing their contact center. So that business is starting. We are getting some around 40-50 people servicing them from India. So that's a good deal we have won. So like that, we are starting to win multiple contracts, big and small.
Sure. And the last thing is about just to reconfirm, this revenue from concept communication, will it be starting from the Q4 or it will be starting from the Q1 of next year? For the
contract started from Feb 1st, so we are now starting to do that, like what Zach said. So we are very quickly trying to see how much we can probably recognize in Q4, because our meter started running. It's up to us now to start executing.
Okay. Sure. And the last thing about the cash or the raising funds, and any update, like anything is happening there, and update on the Vashi property, is it still any update on that?
So that's where we are. So in fact, I answered in the earlier part of it, because it's a vicious loop for us, because unless we do that, we can't accelerate growth.
Okay.
We are working on it. I think the bankers are also looking at some of this balance sheet, right-sizing what we are doing very positively, Sanjay. So it's looked at very positively. So hopefully we will get some relief in Q4.
That's great. Wishing you all the best, team. Yeah. Thank you.
Thanks, Sanjay.
Thank you. Participants who wish to ask questions, please press star and 1. Ladies and gentlemen, if you wish to ask a question, please press star and one on your touchtone telephone. A reminder to participants to press star and one. Well, as there are no further questions, I would like to hand the conference back to the management team for closing comments.
Thank you. I think, thanks a lot, dear shareholders. As always, I think you've been very supportive and very encouraging in our journey, and request all of you for your continued support as we turn around this company. Thank you.
Thank you very much. On behalf of 3i Infotech Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you.